Back in April of 2026, the stock market did something that just defied gravity. It was a rally for the history books, one that left even the pros scratching their heads. So what was really going on? Was this some kind of new chapter for the economy, or were we all just watching a classic spectacular bubble inflate right before our eyes?
I mean, to give you an idea of the scale we're talking about, just look at this number. The NASDAQ composite, it shot up for 13 straight sessions. 13. That is an absolutely incredible winning streak. It's the kind of thing that makes everyone, and I mean everyone, stop and ask, what is happening?
And look, this isn't something we saw just a few years ago. You have to go all the way back to 1992 to find a run like this. So seriously, what on earth could possibly be fueling such a historic, once-in-a-generation kind of rally?
All right, so just how big was this thing? Let's dive in and break down the actual numbers.
And wow, these gains were absolutely everywhere. In just 1 week, the NASDAQ surged almost 7% to hit a new all-time record. The S&P 500 was right behind it, also closing at a record high. Even the Dow jumped over 1,500 points. This wasn't just some tech story. This was a full-on market melt-up.
So, what was the spark? What lit the fuse on all of this? Well, the most obvious catalyst wasn't even on Wall Street. For that, we got to look overseas, to a huge and dramatic shift in geopolitics.
The huge news, the thing that kicked it all off, was this apparent breakthrough in peace talks. After a period of intense conflict, Iran announced it was reopening the Strait of Hormuz, and that is a critical artery for global oil. This was a signal the market had been desperate to hear.
And boy, was the effect immediate. Oil prices, which had soared way past $100 a barrel during the conflict, they absolutely cratered. We're talking a plunge of over 11% in a single day.
Okay, so here's the really crucial part. What we saw was a complete 180-degree reversal of what analysts had been calling the war trade. Money just flooded out of the energy sector and poured right into the peace trade. All of a sudden, airlines, cruise lines, consumer stocks, the companies that really benefit from lower fuel costs and global stability, they were just soaring.
But, and this is a big but, it didn't last. The whole geopolitical story wasn't a straight line. Over the weekend, that initial burst of optimism started to fizzle as the talks hit a snag. And yet, the market just kept chugging higher, and that tells you something else had to be going on under the hood, a deeper engine that was powering this whole thing. And that brings us to the hidden engine, right? The real foundation for all this strength, an absolutely phenomenal corporate earnings season.
I mean, just look at the sheer scale of this. It's wild. A staggering 88% of S&P 500 companies that had reported earnings were beating Wall Street's estimates. That's not just good, it completely blows the 10-year average of 76% out of the water. But here's the catch. The biggest tests were still on the horizon. The entire market was holding its breath, waiting for reports from almost all of the Magnificent Seven tech giants, plus a whole host of other industry leaders. The rally was strong, sure, but its future? That really depended on these names delivering the goods.
All right, let's get into what might be the most complex and, honestly, the most important part of this whole story. We're talking about an invisible force, a fact that the very mechanics of how the market moves have fundamentally changed. Ever since the pandemic, it feels like the old rules just got thrown out the window. We keep seeing these brutal, gut-wrenching sell-offs, but instead of a slow, grinding recovery, they're followed by these incredibly fast, V-shaped bounces that just rip higher, often to new highs, even when the underlying problems are still there.
So what's actually changed? Well, you can really boil it down to three big things. First, you've got the rise of these huge hedge funds, these pod shops that are built to cut risk at lightning speed, which basically wipes the slate clean for a bounce. Second, millions and millions of new retail traders have flooded into the market. And third, their dominant strategy, buy the dip and chase the rip, has become a powerful, market-moving force all on its own.
And a key weapon in this whole new game is something called a 0DTE option. You can basically think of them as lottery tickets for the stock market. They expire on the very same day you buy them, which allows for these massive, incredibly risky bets on where the market's going to go in just a few hours. And their popularity has absolutely exploded.
Okay, so this is where it gets really crazy, because this creates an incredibly powerful feedback loop. Let's walk through this together. It all starts when traders buy a massive amount of these call options. Now, the dealers on the other side of that trade, they don't want to gamble, so they buy stock futures to hedge their risk.
But then, and this is key, as the market rallies, those options become more valuable. That forces the dealers to buy even more futures to stay hedged. It becomes a spiral where buying just creates more buying, pushing the whole market higher and higher.
Now, it's really easy to get lost in the weeds of Wall Street mechanics, right? But it's so important to remember that all of this was happening in the context of a much, much wider world. So let's just quickly zoom out and look at some of the other major stories that were unfolding at the exact same time.
For instance, a huge investigation dropped, and it revealed the truly terrifying scale of these Chinese-led cybercrime rings operating out of Cambodia. These groups were basically enslaving workers to run online scams, draining billions and billions of dollars from victims all around the world.
At the same time, in the corporate world, big money was still moving. Building distributor QXO announced this massive $17 billion deal to buy the insulation company TopBuild. That's a huge vote of confidence in the future of the construction sector.
And you know, it wasn't all sunshine and roses. The private space race hit a pretty big snag when a key satellite for AST Space Mobile was deployed incorrectly by a Blue Origin rocket and was basically lost. It was a major setback in the whole quest for global space-based internet.
And all of this really brings us to a quote from, well, one of the smartest people who ever lived, Isaac Newton. See, after he got swept up in a massive market bubble 300 years ago and lost a fortune, he had this realization: markets aren't just about math and physics, they're about psychology, emotion, and sometimes just pure madness.
And that really is the million-dollar question, isn't it? In a market that's now driven by brand new technologies like zero DTE options, but fueled by the same old human emotions like greed and fear of missing out, are we really seeing a new playbook unfold? Or is this just the same old madness that Isaac Newton recognized centuries ago, now just playing out on a much faster and maybe much more dangerous stage? The answer to that is going to define the next chapter for every single one of us.